Okay, thank you for holding and being so patient. It is about 12:32 now, and I believe we can start the presentation at this time. Thank you all for joining and taking some time out to learn a little bit about your options at this point. And a lot of you are wondering, is now the right time to refinance? Hence the reason as to why you are in this webinar today. Uh, let's get started now. Just wanted to let you know, though, that on the right there is a chat box. So just wanted to let you know that you can start plugging in all of your questions. Any question is a good one. And note that by the end of the presentation, I will be able to answer each and every one of you. Okay, so just wanted to introduce myself before we get started. My name is Yasmin Pena, as I said once again, and I'm the loan officer here at Greater Alliance Federal Credit Union. I've been a HUD counselor for the past 12 years and have lots of experience in the housing industry. I specialize with first-time home buyers and community development. I have a lot of knowledge with regards to a lot of grants and savings programs and a lot of and educating borrowers in different opportunities and how to save money and rebuilding the community. So enough about myself. Let's get started with the reason why we're here, which is, what are your options? Is right now the time to be able to refinance? So the topic for today is going to include what is refinancing. So what does that all mean? Should I refinance? What's the bottom line? The benefits of refinancing, the cost of refinancing, and I'm also going to provide you additional resources that may be available to you that you guys may want to contemplate and see if it works well for you. Okay, so what is the true meaning of refinancing? Okay, so a refinance is a mortgage means paying off an existing loan and replacing it with a new one. So meaning, if so, let's say for instance you have a mortgage today and it's with Wells Fargo. When you're refinancing, you're going to be paying off, or we're going to be paying off Wells Fargo, and we're going to establish a new loan. So the new loan is going to be based off your home, which is used as the collateral. Okay. So um, what are the benefits of refinancing? Okay. Number one, it's to be able to obtain a lower rate, right? So the main reason as to why you want to refinance is because you want to save money nowadays. So what I would say is a good rule of thumb is that if you want to refinance and you're thinking about, okay, is it a good time or not? If the rate that's being offered today is about 1% less than what you're currently paying, it's definitely a great idea. It's definitely a great idea. It can be maybe 3/4 of a point as well, but it all really depends on what your financial needs are. A lot of borrowers decide to refinance because they want to shorten the term of their mortgage, meaning the amount of years that they have to repay. So a lot of members want to go from maybe a 30-year mortgage to then having to pay it off maybe in 20 years because maybe they're thinking about, okay, I want to retire, and once I retire, I don't want to have a mortgage to pay. So a lot of borrowers tend to shorten the years. Okay, they want to banish the mortgage insurance. So that means that they feel that because of the home improvements that they've made, that they have a lot of equity in the home. So let's say, for instance, when you purchased your home, you're at 100%, right, loan to value. So let's say you're using $100,000 as a figure. Obviously you had to give 3% down payment, so now you owe $97,000. So that's just 3%. But being that you've made mortgage payments and it's been about maybe 2 years and 3 years, and or you've actually made home improvements, let's say to curb appeal or to your kitchen or to your bathrooms, you've gained equity there. So let's say you've gained about 20% equity. um, you at that point can eliminate what is called mortgage insurance. That mortgage insurance is something in essence that you're really paying that you're not benefiting from, because it's an insurance to ensure the mortgage company that you're not going to default on your mortgage, right? So it's an extra payment that you're paying. Now, a lot of people, what I'm seeing now that is the trend, they're trying to get out of their FHA mortgages to get themselves into a conventional mortgage. And the reason why is because remember that 20% equity that we were just talking about? If you have an FHA mortgage, regardless if you have 50% equity, meaning even if you paid down the mortgage to like $50,000, you still have to pay that mortgage insurance. And that mortgage insurance can range maybe from $120 to $230, $240 per month. So it's an extra savings. Besides the fact that you want to reduce the rate, you're also going to save on eliminating that mortgage insurance. So again, if you have an FHA mortgage, it's the perfect time to refinance, because more than likely you do have the equity in there enough to be able to eliminate it. And then you're just converting it into a conventional mortgage. So overall, it's a great idea to refinance. Okay. So the last reason as to why people would like to refinance is because they want to tap into the home equity. All right. They want to finance a portion of their equity to be able to pay off maybe credit cards, or they want to do home improvement to their home. Um, they want to, another reason as to why I see people refinancing is due to marriage or divorce, and the formation and dissolution of the other partnerships. Um, and maybe they want to remove or add someone onto the loan. That's another reason as to why they want to refinance. So it all really depends on what your final goal is. But here, let's just say that the reason to be able to refinance is just to reduce the rate and the term. If you want to dig deeper into seeing if whether or not it is a benefit, you can also give me a call and I can have a one-on-one session with you and just educate you and let you know if it's a good reason or how you can go about doing things to be able to refinance. Okay, some of the things that you should know is that while the current climate isn't great, there may be one glimmer of positivity for homeowners looking to lower their housing costs on a long-term basis. Today's mortgage rates are extremely competitive, which means that it may be a good time to refinance despite the general economic turmoil. Okay, now we're going to talk about numbers now. I'm going to give you this example. Um, as to, just to give you an idea to see whether or not it is a good idea to refinance. So if you spend 2,400 on closing costs, you can shave maybe $120 off of your monthly payment, so you won't break even for another maybe 20 months. Now, to dig a little bit deeper into that and just to piggyback off of that, I hope some of you have a pen and paper handy so that I can give you a visual. Okay, so I'm very visual, so um, please excuse me for that. All right, so let's just say your loan amount right now is about maybe $250,000, and that's what's outstanding on your principal. Okay, and let's say your current rate today is maybe 4.25. Okay, so that means that your principal and interest payment is about maybe 1,228. Now, mind you, we're not including escrows because everyone's escrows are different. Escrows are property taxes, homeowners insurance, and PMI. Now, let's say it's going to cost you about $3,000 to be able to refinance. And we're going to talk about what's going to be included in the closing costs later on during this presentation. Now, great news is that, being that we are a federal credit union, we are very competitive with our rates. We have phenomenal rates. Our rate today is 3% on a refinance, and the APR is 3.008%. Okay, that's just a streamlined refinance where you can just reduce your rate and term. Now, if you're thinking about cashing out, today's rate is 3.125 and the APR is 3.133%. Okay, that's today's rate. And please keep in mind they do vary on a daily basis. Okay, now let's go back to the example. So your new rate will be 3% today, which means that your new principal and interest payment is going to be $1,054 per month. Now, that's a savings of about $174 a month. Now, this is what you should analyze. If it's going to cost you $3,000 to be able to refinance, and it's going to save you $174, so it's going to take you about 17 months to recoup that money. Now, overall, is it a good idea? So what you would do is that if you average it out over the next 30 years, you're going to save $62,640. Okay, so it looks like it's a tremendous, great idea for you to refinance at this point if your case is this type of predicament, if your rate is maybe 4 or maybe 3.75%, and again, if you have an FHA mortgage. Okay, so this would be great. So going back to the 17 months, it's a great time to refinance if you have no plans to sell your home for the next, few years, or if you're expanding your family and expecting to need a larger place very soon. Okay, so sometimes this does not pay off if you're planning to sell your property sooner rather than later because you're going to be spending money on the closing costs here. Okay. Now, should you refinance now? Well, if you're going to refinance, you're going to need to make sure that you're in good shape to qualify. That means that you have to have a strong credit. Nowadays, in order to be able to qualify, we're typically looking for 620 credit score. That's the minimum. But to be honest with you, being that this big pandemic is going on, we're really looking into maybe 660, 680 FICO scores. Okay, and you need to have a steady source of income. Something a lot of Americans right now can't claim because a lot of borrowers are currently unemployed, again, due to this tragedy. And so unemployment benefits is not considered to be verifiable income. So in order for you to be able to refinance, you have to be employed. Now remember, if you start an application now, and let's say, for instance, it takes us 30 days to be able to close on this mortgage. So that's typically the time frame that it takes to be able to close. We will verify that a day or a week before closing that you're still employed. So it's very, very, very important that you are aware of your employment history and what's going to happen in the very near future because again, there are some costs associated, so you don't want to get yourself into a predicament where you've started the mortgage process, but in 2 weeks or 3 weeks that you're going to become unemployed. Unfortunately, we will not be able to close on this mortgage. Okay, so again, number one, the fact that you need to still have good credit, and number two, you have to be employed. Again, unemployment benefits is not considered to be verifiable income. And if you have any questions with regards to this, again, there's going to be a chat box on the side where you can ask any questions there. Okay, so the cost of refinancing your home. In general, refinancing includes a lot of closing costs. So generally, lenders do ask for application fees. That varies. It can be $600, it can be $1,000. I've seen $2,000. So it's a really good question if you were to ask that. Okay, what are the fees? Also, in every loan, title insurance and title search will also be another factor. So this charge covers the cost of the policy, which is usually issued by the title insurance company and ensures that the policyholder for a specific amount. covering any losses caused by discrepancies found in the property's title. So that is what a title is. Hopefully you all know what it is because you close on the mortgage when you first obtained it. Okay, lenders attorney review fees. So the company or lawyer who conducts the closing will charge the lender for incurred fees incurred, and in turn the lender will charge the borrower for these fees. And fees incurred for loan originations. A lot of mortgage companies charge a point, or those are things that you would have to ask your lender. So one is, do you have an application fee? Another one is, do you charge points? Those are the two questions that you should ask upfront when considering refinancing your loan. The lender's fees and title fees, those are fees that you're going to have to pay anyway, but they are the title fee is state mandated, and they all charge about the same. You can shop around for title insurance, um, but they're all going to be the same cost. Um, and lender attorney review fees are somewhat the same. But where you're going to see a variation is the application fees and origination costs. So they do charge points originations. Luckily, here at Greater Alliance, we don't charge any of those fees. We don't charge application and we don't charge points. So our closing costs are way less than any other major lender. So um, let's talk about the bottom line. So again, we're going to go over um, reasons why you would like to refinance. Number one, it may be to reduce your mortgage payment. Number two, it shortens the term of your loan. And number three, it helps you build equity in the home. Now, again, another reason as to why you may want to refinance is because of divorce, or because you married and you want to add your partner onto the loan. Okay. So the reason why we included how long do I plan to be living in the house is, number one, the fact that there are closing costs associated to the refinance. So we discussed title, we discussed origination, we discussed attorney fees, we discussed points. Now, we're going to discuss what we charge. We charge, so apparently we don't have any closing costs per se, meaning we're not going to charge you points, origination, processing, application fees. So there's no administrative fees with Greater Alliance. But we do have to charge you the third party fees, right? So the third party fees are appraisal, the flood certification. We charge the escrows, right? We have to establish a new escrow, prepaid interest, title, credit report. So these are all fees that we do have to charge you. And the reason why I'm discussing these fees with you is because it has to make sense for you. So if you're going to stay in the house for maybe 2 3 years, maybe it's not going to make any sense for you. But what I do want to tap into is our products here. If you feel that maybe you're going to remain in your home for maybe, let's say, 5 years, it might be a good idea because we do have that 5-5-30 ARM product, okay, that may be beneficial to you. So what's an ARM product? Um, it's an adjustable rate mortgage. It's an interest rate that changes with a benchmark rate, so such as a prime rate. So there's an introductory rate, which is also at a 3%, which is fixed for maybe 5 years, and then thereafter it can adjust. Again, the reason why I'm throwing the adjustable rate in is because, let's say, for instance, rates a month from now change and they're at maybe 3.5, or I don't know, maybe they jump up to 4. I don't know where the market is going to be, but I'm just going to throw this in there just in case you're not ready right now due to your credit score or employment status. Okay. Always keep in mind we do have our adjustable rate mortgages readily available for you, and they're always at a 3%, possibly depending on the loan type. So it's fixed at 3% for 5 years, and then it'll adjust once, and then it'll be fixed for another 5 years, and then it'll adjust again depending on where the market is. Okay, so um, the rate will periodically recalculate based upon the prevailing market conditions. So if you decide to refinance with another lender, one of the important questions that you need to ask is how much will the rate rise on each adjustment, right? And what is the cap rate? So those are the two questions that I highly recommend for you to ask. Okay. Um, and number two, the second question that you should be asking yourself is, how much money will I be saving by refinancing? Again, what I would recommend for you to do is to go to mortgage calculator. When you see the rate, so on our site, on our Greater Alliance Federal Credit Union site, you can go there, take a look at the rates that we have each and every day. Our rates are being displayed on our site. So once you take a look at the rate, go into Google and type in mortgage calculator, and you're going to type in the amount that's owed right now, and you're going to type in today's rate. So for instance, today is a 3%, and you're going to also then plug in the amount of years that the rate is for. So in this case scenario, the example that we're using is a 30-year term rate. So you're going to put 30 years in there, and right there is going to calculate the principal and interest payment for you. Okay, you're going to then take a look at your mortgage statement, and you're going to take a look at the principal and interest that you're paying currently. So we have to compare apples to apples. All right. So once you compare the two, you take the difference. So you subtract it. Okay. So once you subtract the difference, you're going to see the savings. Now, if it makes sense for you, what you're going to do is that you're going to take the savings and you're going to divide that into how much it's going to potentially cost you. So I'm going to use, 3,000 just as an example. Okay. And then at that point, you're going to make that final decision. And if you'd like to know how much it's going to save you in a matter of 30 years, then, you will obviously multiply your savings by 360, because there's 360 months out of 30 years. Okay. Now, keep in mind, refinancing costs may average between 3 to 6% of the loan's principal. Okay, so it may take years to recuperate that cost, okay, generated by the lower rate and a shorter term. So if you're not planning to stay in the home for more than a few years, the cost of refinancing may negate any potential savings. Okay, guys. Um, so again, take the loan amount and you multiply that between 3 to 6%. The reason why it's between 3 to 6% and it varies is because, again, different lenders charge different fees, such as points and origination. So part of that 6% can be 1 point is going to go towards back into the lender's pockets, right? So it's going to cost you more to be able to refinance the home. Also remember that it also pays to remember that a savvy homeowner is always looking for ways to reduce debt, build equity, save money, and eliminate their mortgage payments eventually, right? Because you don't want to get into retirement age and still having to pay back a large portion of the mortgage. Um, Taking out cash of your equity when you refinance does not help to achieve any of those goals at all whatsoever. Why? Because remember, if you're going to refinance and you're going to include credit cards, remember that credit card debt is considered to be unsecured. So it's not a good financial decision to refinance to pay off your unsecured debt with your secured debt, because that totally defeats the purpose of trying to pay off this loan sooner rather than later. So we do have a few resources readily available for you. And the reason why we're going to talk about this is because it's very important. A lot of people have a tendency to pay for these services, but if you are a Greater Alliance Federal Credit Union member, this is a great perk. We do have free financial coaching with GreenPath. Okay, so what they do is that they will help you focus on what are your concerns, what is it that you need in order to be able to achieve your next milestone. Okay, so they customize a budget and a detailed action plan based upon what financial goals you have. Okay, a HUD counselor is a HUD approved counseling organization that can help you with pre purchase education, reverse mortgages, and counseling, um, reverse mortgage counseling, or foreclosure prevention issues. Now, um, now that we are talking a little bit about housing counseling, if you are currently facing difficulties, or if um, you don't know what your options are right now, whether it is refinancing, or if something happens and you lose your job, and you are, let's say, for instance, a Greater Alliance member, then definitely take advantage of our HUD counseling services. But we also do have options available if you are and have been affected by the COVID-19. Definitely reach out to us. Um, our HUD counselors can also educate you on what type of loss mitigation options may be available to you as well. Okay, such as forbearance plans or what options you may have available. All right, they'll educate you on different ways that you can save money, resources that are available for employment, for weatherization, um, um, for small businesses. They're going to give you a wealth of knowledge. Again, these services are for free. You do not have to pay for it. Everything will be in writing. They'll also create a debt management plan for you if you need it. They'll help you prioritize which payments go first. They'll negotiate payment amounts and set up a payment schedule with creditors as well if that's what you need. And they'll also do a credit report review. So this piece right here is very important, and the reason why is because when a HUD counselor gives you details on what your financial situation is, they'll pull your credit report from TransUnion. It will not affect you at all whatsoever because they're not a financial institution. Okay, they're a HUD counseling agency. So for that reason, they can pull your credit report 20 times. It will never, ever, ever affect your credit score. And the reason why they pull it is because, again, they'll develop that client action plan with you to educate you and let you know what is it that you need to do in order to increase your credit score and then get you to that point where you can refinance. Okay, because remember, the higher your credit score, the lower your rate. So you want to get to a point where you can obtain that 3% that we have today. Again, that's dependent upon borrowers who have a credit score of 740 or above. Um, so again, the higher your credit score, the better your rate. Now, if you'd like to speak with a HUD counseling agency with GreenPath, their number is written right on the presentation. That's 877 337 3399. Just advise them that you are a Greater Alliance Federal Credit Union member and they will not charge you for these services. Okay. So now we are in the questions box. So let's take a look here. Please, everyone who has a question, just include it in the chat box and I'll be more than happy to answer any question. Let's see. Okay, so I'll give you a few minutes. Okay, so there are no questions in the box. Um, let's see. Yeah. Okay, there are no questions in the box, but I'm going to provide you with my contact information. If you have a moment, we would like to hear your feedback and maybe fill out a short survey at the end of this webinar. It helps us improve our webinar experience and your webinar experience. It'll only take a few minutes for you to complete. Okay. Um, Thanks for attending. Here are the ways that you can follow us. We'll send you the recorded message, the recorded web, and you can see it on your YouTube page. If you'd like more information, you can please give me a call on my cell phone number, which is 908 210 1147. My email address is yasminp at mortgage department is abbreviated.com. Okay, thank you very much. Thank you all for attending. You have yourself a great day and stay safe.